Hello everybody, welcome to my daily chart for today, June 27, 2012. We are as usual on a 60 minutes chart of Euro US dollar, and the Euro is going down against the dollar. We have some pretty bad news coming from the Eurozone regarding the crisis that's been going on. Now Spain is in a crosshairs with its bond yields increasingly getting higher every day. Spain has a little bit hard time selling its bonds at a lower price. As soon as that approaches 7%, that's kind of considered critical interest level for any country from the Eurozone. Barring at that high level, it means that probably won't be able to pay them on time. So that kind of puts a pressure on the euro. We see this newly formed trend channel that's been going on for a few days, pretty well defined, giving us good opportunities to go short. We had one right here. It was kind of in the upper area of this trend channel. It went all the way to the support line. That was a good trading opportunity. Then we went through a retracement. That was yesterday. We talked about that situation on our daily chart presentation. Then we have a second opportunity. This was kind of in the middle of the trend, but because it was such aggressive move, we consider that being a good trading opportunity, with the MACD just rolling over, bouncing off its zero line, creating kind of confirmation. It wasn't a definitive one, but it still was a confirmation from the MACD. We had the support line reinforced by the Skumo cloud, a pretty thick resistance zone, so we consider that the price has room to go lower. So that would have been a good short trade. We took one. Let's see how it went down. Here we go. We set up this this line as a breaking point. If the price will go below that, we consider that as a breakout within the trend and a go for the trend. So here we are, we're short. Our stop loss was set just above the 12500 limit, which is a key resistance. We had a pretty good risk to reward ratio. We see right here the stop loss, and we see the take profit limit. If would be to consider the 12400 as a take profit limit. However, as you know, we always manage our trades manually. More likely the price will stop somewhere around this level of 12440, close to the support line of this trend. A few moments later, we're in profit. We were already, the price actually moved pretty aggressively all the way to the support line, then it retraced a little bit back. We were $7 in profit, but as we see later on our chart, actually the price after a short retracement resumed its movement downwards and reached this value. Let's switch to our chart. Here we go. So here we are. We see we had the retracement that actually didn't catch our stop loss. Our stop loss was 1254. We see it right here. So this candle actually did not catch our stop loss, and we were good on the next one, which took the price all the way to 2440. Actually, here we go. We moved our trade manually, our take profit limit manually, and we were somewhere around here. So we got a pretty good amount of pips, for like 38 pips if I remember correctly. So that was a good trade. We exit manually. We didn't let the price to go any further, and we did it right, because as you can see, the price actually resumed its retracement all the way to the trend line, giving us the second opportunity that probably will materialize today if the price will get beyond this level. We see this. Let's jot down a chart. This is a key resistance, key support level 12470. If the price will go below that, that will create another good trading opportunity for going short. However, we have to keep in mind that we have a divergence at the MACD that's been going on for a while. We had it yesterday too, but we kind of ignore it. However, now it's getting a little bit more significant. You see the MACD is making higher lows. It's been doing that for a few days. The price is doing something different. So we have this divergence, a pretty pronounced one. The MACD zero line acts as its resistance, forming this ascending triangle within the MACD. So in case we get a movement downwards of the price, that will coincide with the breakout of the MACD out of this triangle, which actually is going to be a bounce from its zero line, that will be a good confirmation to go short in this market with a pretty good take profit limit, risk to reward ratio, excuse me, with the take profit limit set somewhere around this level or even lower. We can go all the way to 12400 all the way here to the support line. The price will be to break through this support. Then if we enter somewhere around this area, excuse me, let's move this, here we go. If it would be to enter somewhere around this area, then we have a pretty good risk to reward ratio, a nice room to make some pips with a stop loss set above this last high, and like I said, take profit somewhere around this support zone. So it's gonna be a pretty good risk to reward ratio trade with a good possibility. And again, we gotta keep in mind that we have a MACD divergence. Usually these go against the trend and have a tendency to reverse the trend in case, especially if we get some not so bad news coming from the Eurozone. Thank you very much for being with us, and we expect you on another session of Daily Chart.